welcome back to another video. If you're new here, I release videos like this every other day on my YouTube channel about the stock market or stock picks. So if you're into that, subscribe down below and leave a like on this video for the YouTube algorithm. So getting into this, what is Zoom? Zoom is an American video communications company, much like Skype or Discord. It was founded in 2011 and has been gaining popularity since. It has had fairly steady growth, and it's been booming considering we have a pandemic and we've had lots of shutdowns causing schools and business meetings to not be able to continue in real life and having to switch to online options. So for business travelers, this is a fun fact that does help with possibly allowing Zoom to continue growing even after pandemics, but business travelers only make up about 12% of airline travelers, but are twice as profitable due to repeated travel. Also, business travelers represent about as much 75% of airline profits. This is mainly due to them buying first class and higher priced plane tickets. So the reason I bring this up is since airlines are closed down and there's not a lot of air travel, and air travel is very expensive, people have been going on to Zoom. And since before people didn't think of, oh, let me just do my business online, since it wasn't really an option and it wasn't really an idea, now people have been able to experience this and have been forced into it, and a lot of people are considering to switching over because it's much more comfortable and costs less money. The ticker symbol is ZM on the NASDAQ. It's about $260 right now. Its earnings are on March of 2020. Its GAAP EPS is positive, which is great because this means that the company has more money and it's not losing money. So its EPS was positive at about 9 cents, which is an improvement from 2018's -3 cents. This is due to earnings gaining about an 88.4% growth in 2020 since 2019, and its cash flow is positive and has had an increase of 188.5% increase from 2019 to 2020 at 0.16. Now, the growth in the past month has been pretty steady and good comparing to a lot of other stocks we've seen in the stock market. It's had a growth of about 4% or a $9.17 increase over the past month, which is also over the past 6 months we've seen about a 244.45% growth or about $185 increase. Now, this does seem like a lot, but since the company is fairly new and we've seen a lot of companies gaining a lot of money and a lot of value like Amazon, I do believe that we could still see some more increase and we could have lots of upside potential. It's just a stock to keep your eye on, and it's less of a couple weeks holding get me rich. It's more of a long-term investment in my opinion, but that's only my opinion. So the dividend, there is no dividend available right now like a lot of tech companies, and this is good in the sense that all that extra money that they're using, they're probably going to use that to expand, and they are pretty much worldwide now, and there's a lot of other places in the world using that right now. But moving on to PE ratio. Now, if you don't know what this is, price per earnings ratio, the higher it is, the more overvalued the stock is. The SPY has been around 13 to 15. So as you can see, 1,439, which is almost 1,500, is quite high, which does mean that it is quite overvalued. So that's something to watch out for. That doesn't mean that the company is going to crash tomorrow. That just means that it is quite overvalued, and you need to be careful because there are a lot of companies out there that have really high PE ratios. It's just much more risk associated with it. Now, the market cap is 73 billion about, which means it's a large cap company. So right here you can see the earnings per share, and you can see it has had a steady increase along with the revenue, which has also had a steady increase. And as you can see, these both graphs match up pretty well with the actual stock price. So the cash flow as well has gone up, and as you can see, steady increase over the stock price. It's not a sudden spike, and it is quite volatile though, so you might have days where maybe weeks where you're losing $20-30 on end, but overall you're usually up. And that's the thing with a lot of these large cap long-term investments. You're going to have lots of negative days, but you're also going to come out green overall. But it has started getting less momentum over the past couple weeks due to this crash in the NASDAQ and a lot of tech companies. So I don't know if it's found its bottom yet. As you can see, we're going back down. But yeah, also the volume, it has calmed down quite a bit. As you can see, it has outperformed S&P 500. So yeah, that's just something to keep in mind. So that's it for this video. Thanks for watching. I hope you enjoyed. If you did, leave a like down below. If you didn't, put a dislike. Comment down below what you think about this stock and what other stocks you're looking out for, or how I can improve these videos. So thanks for watching.